I got crushed on a cash secure put. So I will be bag holding essentially, but I'm going to show that cash secure put from start to finish and talk about, the power of rolling and also the power of net premium when we look at things like the cash secure put. All right. So what happens when you get assigned on a cash secure put? All right. So you put a cash secure put, you put a strike, and then the stock price tanks, right? So you are left buying 100 shares at a strike price way up here where the share price is really, really down here. And if you go to make calls at your basis now, you're kind of screwed. That's kind of what happened to me in the challenge portfolio with JJ Buckner and I. I can't believe it's been a freaking month already. A month ago, I closed. Let me share this real quick with you, and I'll show you what I'm talking about. Here's a look at that put that I wrote last month. I can't believe it's been a freaking month. So what happened with this particular Tattoo Chef? Tattoo Chef was down, and I this is what I said on that live stream or wherever I talked about this particular move. Maybe it was on the podcast when we were talking about our challenge portfolios. This was my first in the money cash secure put that I've ever written in my whole life. And with that came some associated risks. Number one, I said that I had a pretty good idea that in a month, Tattoo Chef was going to bounce back and be above 2250. At the time, it was like 18 and change. They had a bad earnings call. Like I thought that they were going to come back. So I wrote this it was a monthly. Tattoo Chef is monthlies. So you can see right here, I collected $311 in premium for this option. So if it's $22.50, let's see what the return on investment that this was just on the premium. I got my calculator right here. It was really $312, but let's put in the fees. $311.31 divided by $22.50. So in 1 month, I got 13% return on this, okay? 13.86. So regardless of what Tattoo Chef's share price did, and this is the beauty of selling puts in a market that's a little bit down, or even just selling long-term puts like my Intel put. 6 months I wrote that put for. Right now I knew that I was going to get 14%. Even if it goes down, it stays in the money and I get assigned, I'm going to make 14% on this investment. Who wouldn't take 14% a month? I mean, in this current market, maybe because everyone's YOLOing, but I said to myself, for 1 month, 14% of my money, I will take that all freaking day. So I put $311 in my pocket. Then if we look, here is the chart for Tattoo Chef. It ended the week at 1680. So I got assigned. So right now I had to buy, this is what happens when you get assigned. You have to buy 100 shares at the strike price, $22.50. So essentially, if we look now, this is a screenshot of the top one that I just did. Now here's where it says I got assigned. So minus $22.50. But what some people don't realize, so right now I say if we're going to do the wheel, right now I own 100 shares of it. I can write covered calls. And rule number one is that we never write covered calls lower than our basis. What's our basis? The average cost per share that we paid for those 100 shares. In this case, $22.50. So if I was going to go in and write a covered call against this now assigned Tattoo Chef position, $22.50 would have to be my minimum strike for me to quote break even. And this is a monthly. But what you have to take into consideration is you've already collected. If you get assigned, you already collected that premium. This money's spent. I already bought a ton of bricks of Bud Light with that $311. Now, if you didn't spend it on Bud Light and you just had it in your buying power, well, now essentially, instead of getting assigned for $22.50, you're getting assigned $22.50 minus $311. So then we call that the adjusted basis, right? So if I say $22.50 minus $311.31 divided by 100, that means my actual cost basis on this particular move and what I would be okay selling a covered call for would be $19.38. Now there's no $19.30. There might be a $19.50, but essentially I can go in on Monday and I can start to look at covered calls. Now this is a monthly, so the next expiration is a little bit out. And I'm going to wait for Tattoo Chef to hopefully come up a little bit more closer to that $22.50. Because if I could do that, then I really keep that true $311 in premium. But if I can't, and it's getting towards the middle of the month and there's like 2 weeks till expiration, and I can get some premium for writing a call at 1950, well, I'm going to collect premium there. So I'm going to win there. And because of the premium that I collected to make this cash secure put, I essentially can break even there. So this is kind of like a big picture thing because people treat premiums to options in all different ways, shapes, and sizes and things like that. If you are going to think about your net adjusted cost basis, you could take your premium into account here. Instead of saying that you have to write a covered call for $22.50, you can say that you're writing it for $19.50. As long as you understand that by writing that covered call at $19.50, you are eliminating the premium, that 14% gain that you made when you wrote that CSP a month. Because this happens a lot, and it happens on the call side too, right? Sometimes we write a covered call and say the strike price is $22.50 and it shoots up to $28. Well, now you have to buy a $28 stock. You lose all of that potential. You have to sell a $28 stock for $22.50, so you lose that capital gain. This is going to happen if you are going to participate in the wheel strategy. It's as simple as that. You have to understand that and know that that's part of the associated risks that come along with doing the wheel. All right. So don't really stress out about getting like I always hear like this phrase. I'm going to make a shirt that says, what happens if the stock price tanks? You know, what happens if it tanks, Brad? You know, drink a beer, calm down, and get the freak over it. You know, because this is a long game. And with Tattoo Chef, even with it being $18 and change, I think it's going to get up to $22.50 one day. Or I never would have even wrote in the call to begin with. I never would have even thought about it because everything that I do cash secure puts with and everything that I do covered calls with and everything that I wheel with, I'm doing this because I want to own the stock. Back to what I just said a few minutes ago. I want to do the due diligence on the stock. So that's all I got to really say about that. Dive back in the chat and see if there's any other questions here.